America doesn't want a privileged aristocracy. Here's how to prevent it. We need to raise the estate tax. At a time of historic economic inequality, it should be a no-brainer to raise a tax on inherited wealth for the very rich. Yet there's a move among some members of Congress to abolish it altogether. Today, the estate tax reaches only the richest 0.2% and applies only to dollars in excess of $10,860,000 for married couples. That means if a couple leaves to their heirs $10,860,001, they now pay the estate tax on $1. The current estate tax rate is 40%, so that would be 40 cents. Yet according to these members of Congress, that is still too much. Abolishing the estate tax would give each of the wealthiest 0.2% of American households an average tax cut of $3 million. And the 318 largest estates would get an average tax cut of $20 million. It would also reduce tax revenues by $269 billion over the next 10 years. The result would be either larger federal deficits or higher taxes on the rest of us to fill the gap. In the big picture, the richest 1% of Americans now have 42% of the nation's entire wealth, while the bottom 90% has just 23%. This is a greater concentration of wealth at the top than at any time since the Gilded Age of the 1890s. So instead of eliminating the tax on inherited wealth, we should increase it back to the level it was in the late 1990s. The economy did wonderfully well in the late 1990s, by the way. Adjusted for inflation, the estate tax restored to its level in 1998 would today touch estates valued at $1,748,000 per couple. That would yield approximately $448 billion over the next 10 years, way more than enough to finance preschool for all and 2 free years of community college. Our democracy's founding fathers did not want a privileged aristocracy, yet that's the direction we're going in. The tax on inherited wealth is one of the major bulwarks against it. That tax should be increased, not cut.